What's going on, everyone? This is Vince from Life with Vince Lou, and in today's video I go over how you can make more money by opening a high yielding savings account. So I do have to preface that I am not a financial advisor, so please consult your financial advisor for more details. I am only speaking from my own experience and through my own research. As far as a high yielding savings account, it's exactly what the name says it is. It's a savings account that yields a higher rate of return than your average commercial bank savings account. By commercial bank savings account, what I mean by that is the big banks that you're probably banking with, Wells Fargo, Chase, Bank of America. These commercial banks usually are the ones that you deal with on a day-to-day basis, where you can go in a physical location, doing withdrawals, doing loans, depositing your money, everything like that. A lot of these commercial banks, their rate of return for a savings account tends to be really low. It tends to be 0.01% to 0.05. So let's take, for example, if you had $10,000 at a 0.01% return, if you put that $10,000 into a savings account on January 1st and you let that money sit for a whole year, at the end of the year, you're gonna have $10,001. So a high yielding savings account is still through a major bank, but these banks tend to be investment banks versus commercial banks. So banks like Goldman Sachs, Discover, Ally, Synchrony. I personally bank with Marcus by Goldman Sachs and use their high yielding savings account. With that being said, let's get into it. Pros and cons of a high yielding savings account. Let's start off with the cons. So con number one, accessibility to a physical branch. Because you're dealing with an investment bank, they tend to not have a lot of locations where you can just go in, meet with someone, and do a transaction. Most of your transactions are going to primarily be done online, and then if you need support, you're going to need to call them. In addition to that, depending on what investment bank that you bank with, some of them give you ATM cards and some of them don't. So with me, Marcus by Goldman Sachs, they don't give me a physical ATM card, but I think Discover Bank does. But even with that, Discover Bank doesn't really have a lot of ATMs, of their own ATMs, where you can go in and withdraw that money. So con number two is liquidity. If you need your money right away, like within an hour or less than 24 hours, you're probably not going to get that. The fastest that they work is 2 to 3 days. But even with that, 2 to 3 days is still pretty fast. Usually you'll link up your commercial bank to your investment bank account, and then you'll make transactions that way. So when you need your money, you'll just send a transfer from your investment bank, and then it'll take 2 to 3 days. So with that being said, the liquidity, it's not as immediate as a commercial bank, but it's still relatively fast. You still get it within 2 or 3 days. So let's get into the pros. The first pro is the annual rate of return. So with investing in a high yielding savings account through an investment bank, the annual rate of return tends to be a lot higher, usually around 2 to 2.5%. For me personally, I bank with Marcus by Goldman Sachs, and right now they have a 2.25% return. So take, for example, that $10,000 at the beginning of the video. If I put that into my Marcus by Goldman Sachs bank account at the beginning of the year, January 1st, by the end of the year, I'm gonna have $10,225. So that's literally $225 more, or $224 more than if I would have put it into Wells Fargo. So 225 times better rate of return than your commercial bank. So another pro, your money is FDIC insured up to $250,000. So what does that mean? It means that if anything happens to the bank, the government backs it up to $250,000. So even with these commercial banks, Wells Fargo, Chase, Bank of America, they're FDIC insured, but so are these investment banks. So the last pro that I have for you all is that some of these banks, to open up a high yielding savings account, actually they don't require a minimum balance. So to open up my GS Bank, I think 2 or 3 years ago, they said that I could put in $1. So, and then there's an upkeep fee. So you definitely want to look at the fine print of which bank that you deal with or that you're going to sign up with. Make sure that there is no minimum balance required. So I'm sure I'm missing a lot in this video. This is only a very surface level video, but definitely read the fine print, do your own research, and it's up to you whether you want to sign up or not. If it makes sense for you, you probably want to consider it. So thanks for watching. I hope you guys enjoyed that video. Hit that subscribe button if you haven't already. Comment down below with comments, questions, concerns, sarcastic remarks, and give me a thumbs up if you liked the video. See y'all soon.